Welcome back to another Stock Market Open Live. Oh man, have you ever had it where your PC just black screens and the only way to actually get, I've never had this with a Mac, mind you, but the only way to get the sucker to turn on is literally disconnect everything out of the back of the thing, then turn it on, then replug everything back in, and then all of a sudden it works. I don't understand. That just happened to me, and I'm like, no. But anyway, I've gotten used to it happening now, and usually what I do is I have everything restarted every day, so like it doesn't do that in the morning, but sometimes it still does that anyway. It's kind of annoying, but yeah. What stock do I short? Is it the Nvidia chip? Is that the omen that says go short Nvidia? I don't know, but there is something weird going on, and it is that minute chart. What is going on with that minute chart on Bitcoin? What is that? This is crazy. Look at that breakout. I don't know, an hour and a half ago, we go from 61.7 to 63, only to go straight back down. What the hell is that? That is very odd. I'll just put it that way. I haven't seen that before, this sort of movement. But anyway, initial jobless claims coming in at 212 versus the previous 211 and the estimate of 215,000. Not a big deal. It always, in my opinion, it just takes a while for you to actually get to initial claims and actual joblessness showing up in these numbers. I'm more worried about what's going on with job openings being removed. I think in a weird way, just based on some of the, I don't know, relatively generic, but it's anybody can do it. Just based on simple research, it seems like the first thing that you'll actually see turning in data is the job openings section in labor. So when you get job openings turnover, like what you're seeing, for example, Tesla goes and lays off, 10 to 15% of its employees. And then what do they do after that? Well, they essentially close all their job openings. That's bad. You go close all your job openings. What do you end up with? Well, you end up with a situation where you've now shown JPOW that at least this company doesn't have any ability for anybody to come get a job anymore. So that's not good. And if that spreads across the economy, then we get a little oopsie doopsies. Now, one of the things that I looked at yesterday was I was looking at warn notices just to see if I could get a little bit of an insight into this. So you could just do St. Louis Fred warn notices. And you're seeing a slow uptrend that I think is somewhat going unnoticed right now. Maybe I'm crazy, so I'll pull that up if I could get the dart. It's on my phone, so worst case, I'll forget the link here. But we were looking at this yesterday, and I'm like, that's very interesting. I have some discharge here. One second. Okay, so it's very difficult to look at COVID numbers because COVID screws up charts. Anybody who understands statistics knows this is a rational problem. This makes sense that you have this problem. So generally what I do is I analyze the right and then I analyze the left, and this is not a surprise. So if you look at this, you can clearly see that job warn notices like layoffs and discharge, they fell after COVID, and they sort of bottomed out there around May of 2021. Interestingly, it's been up since then. Now we're at about 1.7-ish, somewhere between that 1.6 to 1.7-ish, which is not recessionary. If we go back in front of this, we can see over here, in 2019, we were at these levels as well. And so, 1.7, all the way up to 1.9. So this doesn't necessarily say that the warn notices we're getting right now are, exceptional. The difference is, here you had more of this sort of stable to downtrend. And, whether the relative number is the same, might not matter, in my opinion, as much as the trend. But anyway, it's something I'm watching. Is that the only time you really had an uptrend was right here, 2007, going into the recession, and then obviously a spike in the recession. But again, that's obvious. So again, when I look at this sort of right side, this uptrend is interesting. So I think it's worth watching. I don't think it's necessarily a way of saying, oh yeah, the great jobs recession is imminent. I don't think that at all. But I do think it's actually the irony is like, because the jobs recession isn't imminent, you're gonna have a JPOW who keeps rates higher. Well, I shouldn't say higher for longer, because that implies that he might continue to raise rates. He's made it pretty clear that he doesn't want to raise rates anymore. Just high, so 5.375 for longer. And he's doing that in part because he says the labor market is still very strong. So you're kind of, stuck between this rock and a hard place where it's like, okay, great. Jay Powell thinks the labor market is very strong, and then anecdotally every single day it feels like I'm getting comments from people who are recruiters or work at companies, or they send me DMs on Instagram or Twitter, and they say, hey, I just got laid off, whether it's from Tesla or something else. And, people are concerned out there. And so, I don't know. But maybe one day Jay Powell will wake up and realize it. But then the concern is when they do, it's too late. Oh, anyway. Okay, let's see what's going on in the pre-market. It does seem like things are trying to go. Look at that. Almost a perfect bounce. Respect the lines. I always say it. And when I don't listen to myself when I trade, I lose money. When I listen to myself and I follow the lines, it works. Just follow the lines. It's so simple. Just follow. If you want to make money trading, follow the lines. No guarantees, but oh man, yeah, I had a rough ending to yesterday. I had a really, really great first half of the day. Actually, everything up to like noon. But anyway, let's take a look at what's going on into the open here. So this is pre-market. Wow, Etsy's down 4%. I want to see what's going on with Etsy. And then somebody says TSM beat. Why stock down? Okay, I'll find out. Let's see. Yeah, so often when that happens, it's an expectation of the future that the market wants to price in, right? It's what the hell? It's just the amount of software problems coming around today. It's crazy. Black screen of death. This crap doesn't work. There we go. Yeah. Sometimes you could restart every single day and you still have problems. Anyway, so Etsy down 4%. DoorDash also down 3%. Interesting. Okay, let's take a peek here. Let's go Etsy. And let's see what's going on here. So, okay. Morgan Stanley flips from eBay's biggest bear to top bull on AI. Okay, what does that have to do with Etsy? Oh, there it is. Etsy cut to underweight at Morgan Stanley. So Etsy prefers eBay, Morgan Stanley prefers eBay over Etsy. Okay. All right. That explains that. Then we have DoorDash, the international food conglomerate. There's no news actually on this one, other than yesterday, senators seek information on DoorDash, Uber Eats junk fees. I was complaining about that the other day on Twitter. I'm like, what the hell? Why is getting like, what was it, like 4 burgers and 2 chicken nuggets or something, like $90? Like the fees are pretty remarkable, but you're also saving time. Well, sometimes. Because sometimes you have to sit around and wait for them, and then they get lost. And then you end up spending more time, or they screw up your order. It's fun. Anyway, Europe car sales fall 2.8% in March on weak electric vehicle demand. You had a downgrade at Deutsche Bank for Tesla. I could pull up that downgrade. But, let's see here. Somebody shared it on Twitter, so it makes it nice and easy then. The amount of stuff people share on Twitter is great. Here we go. They quoted him. Considerable risk from going balls to the wall for autonomy. Oh, that's funny. They quoted him. Oh, that's funny. Everything college football. Kevin's live stream is best birthday gift. This is what I have to say about that. Happy birthday. So, yeah, you know, I just want to say, SpongeBob is by far the most inconvenient cup of coffee to drink from. You look at this. It's square. Oh, man. All right. I know, TSM. I know, you've spammed it like 27,000 times. Chill, bro. It's down 2% and you're having a heart attack. So where were we? Okay. Yeah, I saw this. I was at what was it? I was at Universal Studios with the kids. And Lauren's like, I'm going into the Hello Kitty store. I'm like, no! And she's like, you will be coming with me. I'm like, okay. They sell SpongeBob mugs there. Who knew? We are downgrading Tesla from to hold from buy and cutting our price target to 123. Whoa, 189 to 123 in light of the high likelihood of Model 2 pushout and the company's change in priority to robotaxi. While we have been at the forefront of warning investors about the downside risks to Tesla deliveries, pricing, and earnings through 2025, our longer-term buy rating was predicated on a next-gen vehicle priced at $25K coming later next year, which would allow the company to reaccelerate volume, margins, and free cash flow. Right, because remember, they said they were between growth cycles, right? Pushing out the Model 2 will create significant earnings and free cash flow pressure on 2026 estimates and make the future of the company tied to Tesla cracking the code on driverless autonomy, which represents a significant technological and regulatory and operational challenge. Oh, right. Oh, well, we'll make the future of the company tied to Tesla cracking FSD. Okay, I feel like I missed some words there. Anyway, it's early. So we view Tesla shift as thesis changing and worry the stock will need to undergo a potentially painful transition in ownership, with investors previously focused on Tesla's EV volume and cost advantage, potentially throwing in the towel, and eventually replaced by AI/tech investors with considerably longer time horizons. Yeah. The delay of the Model 2 efforts creates the risk of no new vehicle in Tesla's lineup for the foreseeable future, well, other than the Cybertruck, which would put continued downward pressure on its volumes and pricing for many years, requiring downward earnings estimate revisions for 2026. With this backdrop, we now push out the start of volume deliveries for the Model 2 to 2027, essentially modeling a much smaller volume for the Model 2 from 1 million units to only 80K, which cuts our EPS estimate meaningfully, now to $2.40 from $4.25 prior, and there could be further downside risk to the new base case for the Model 2 being delayed or canceled. Tesla's aging vehicle lineup is already facing considerable demand weakness and price pressure so far, and our sense is that Tesla has now moved into cash preservation mode. Yeah. Without any new vehicle, we feel that Tesla could face more headwinds to growth as competition in China from other OEMs, to which the company may not be able to respond due to limited free cash flow. Well, basically gross. Long-term investors have been comfortable looking past considerable downside risk to 24-25 estimates, as long as 2026 would show an inflection point in reacceleration. Now that 2026 and 27 and perhaps beyond could all be just as depressed or worse, owning the stock could become much more difficult. We analyze in this note the potential addressable market and business model of the Tesla robotaxi based on previous comments by the company and other sources, and conclude there is meaningful margin and earnings opportunities down the line if Tesla is able to address all considerable hurdles. So in other words, there's really big upside. Yes. Under a Tesla-owned and operated fleet, we estimate the company could theoretically generate $15 billion in gross profit from robotaxi by 2030, making up for more than $12.7 billion we had projected for the Model 2 by that time. But to get there, Tesla will need to solve significant challenges, as we discussed. The fact that Musk announced an unveiling of robotaxi for 8.8 in no way means the technology is ready. We worry there is considerable execution risk to the development of robotaxi tech, and that a fleet development could be years away. All in, we cut materially our earnings estimates for 2026 and beyond due to the Model 2 pushout. Wow. New $123 price target. Yikes. Alright, let's see what's going on with TSM. Okay. TSM. Somebody here says, why is everybody missing the significant cost reduction of 48-volt architecture applied to current models? I honestly don't know that that's true. Because if you listen very closely to what Elon says, I'm not saying you're not, it's not an insult. Just saying, if you listen very closely to what he says, we're trying to help teach the industry how you could go to a 48-volt architecture so that suppliers can actually start providing enough supply. I don't think current vehicles are going to shift to 48 until, A, you have the cash flow to make the transition because you now have to re-engineer the vehicle. I'm not saying it wouldn't be a good idea to do it, but like, are the cost savings worth that transition in a very difficult time? Probably not. So, yeah, they'll do it in the Cybertruck, but again, the parts are probably much more expensive. I mean, let's say we're using, an Ethernet base for everything. Now you're going from traditional off-the-shelf components that cost pennies to stuff that probably cost, multiple dollars and then gets delayed in shipments through the Red Sea or whatever. I don't think it's as easy as just saying, oh, but they're going to 48 volt, therefore margin, we're going to save $250 per car because we're using less copper wire. And that's going to save the company. I think unfortunately, I think the 48-volt architecture applied to the current vehicles at this time is a rounding error. In the longer term, when supply for those parts is substantially more available, then I agree with you. Then I would agree. Okay. David, you're kidding, right? Hold on. Try drinking from the corner of the mug. Okay, I'm gonna try. It's painful, but it works better. You're right. Good call. Like, it just like smashes your lips, but it does work better. Somebody here said something about Gary Gensler. I don't see anything about that. Although I feel like that's just like a thing people like to say. Yeah, I don't see anything about that. All right. So, with that said, let's see what's going on with TSM. So, TSM. Net income. These are Taiwanese dollars. They did beat on net income for Q1, 225 versus 215, so you got to beat. Margin beat at 53.1 versus 53. Q2 gross margin comes in at a miss, looking at 52 versus 52.8. Operating margin comes in at a slight miss, 41 versus 41.3. Margin hit 50 basis points due to earthquake. Wow. Oh, so they did get a little hit from that earthquake there. Power cost to increase from April. Longer term margin of 53% is achievable. Still expects full year CapEx 28 to 32%. 2024 sales growth low to mid 20s in USD terms. Low to mid 20%. Okay, so like 21 to 24-ish. So why is it falling? Taiwan Semiconductor down after the company beat expectations and gave outlook, While analysts are broadly positive on the company, especially given the expected growth tailwind from AI, they see weakness in key product categories like smartphones and PCs. TSMC's downward revision for 2024 global foundry sector sales below 20% and unchanged capex, despite likely strong AI chip demand, implies weaker than expected rebound in smartphone and PC orders. Yes. Okay, so that's the beef. Wow, okay, interesting. Less, like, AI fine, but less of everything else. Honestly, I don't think that's why the stock is down. I think this is just a bearish take. But I think AI, it's like, if you miss, the stocks are going to plummet. And if you beat, the stocks are going to fall. Like, I think the market feels so toppy right now, and people feel so concerned about it, that I think that there's a real possibility of that. I don't know, because it doesn't seem that bad, like you said. But that seems to be what people are complaining about. By the way, I was wondering, do y'all think we should do, because there's a chance we're going to move up the House Hack fundraising deadline, because we got a really good, and I just want your opinion on it. I'm not trying to like pitch it, although if you want to invest, that's cool too. Read the PPM at househack.com/2024. But anyway, we're probably going to move up the fundraising deadline because we got more really good deals than we thought we were going to get, which is like a good problem to have. But we'd have to fundraise a little bit more if we wanted to do that, because we don't want to, spend all our money. We need, runway in case there's like a recession or whatever. And so we were thinking about moving up that deadline, but what we were also thinking about doing, because a lot of the people who invest, they want to talk to us, what we were thinking about doing is taking like a week to 10 days where we just go visit a bunch of cities around the country. So think New York, I don't know, probably San Francisco, Los Angeles, San Diego, probably Austin, Miami, and just sort of do like a little meetup or whatever, where if you have questions about house, I don't know if like would people care about that. So I'm kind of just curious to see what y'all's opinions would be on that. I actually thought also what would be interesting is two other locations that come up as pretty popular: London and Toronto. Wow, London and Toronto. I thought that was really interesting. So I don't know, but yeah, let me know what y'all think about that. Yeah, we'll probably add to that list as well. But like, would that even make a difference to people's interest in investing? I mean, like, I know there are going to be people who are like, hey, like I invested and I want to come visit and just catch up or hang out or whatever, which that's cool. I'm all for that. But I guess I wonder, like, does that make a difference for somebody who's thinking about investing? So anyway, London, Ontario, yeah, it's pretty close to Toronto. Yeah, I was thinking about doing London, the United Kingdom, and like Florida, Texas, New York. What we'd probably do is we would just like, hey, come meet us at the airport. Like, and if you want, you can go look at the PP. But they have like little meeting rooms over there too. So it basically brings the cost to zero for House Hack, which is great. But yeah, you can invest internationally, which is kind of cool. It's kind of awesome. So Zurich, Switzerland. That's kind of cool. So yeah. All right, very well. I'm surprised how many people are like, yes, come to Toronto. That's really cool. Yeah, Florida and Texas, y'all gonna have a little bit of an inventory issue. I've recognized that for about a year now. Good for an educational standpoint. Yeah, and I mean maybe try a 7-day cruise. Nah, people don't have time for that. At some point, I do want to do. Could have been more valuable for the Reg A. Maybe. Yeah. It is what it is, though. Use House Hack money to travel fundraise? No. I pay for the plane right now. So we'll fly around. It really, see, the cool thing about it too is it wouldn't cost HouseHack any money. So we could do, what we're thinking is like probably like 15 cities. And it's, I mean, other than labor, it doesn't cost anything, which is kind of cool. Because when you land a plane, they'll let you use their conference room for free. Or well, you know what? We'll do it like Trump. I don't know if we're allowed to do that, but we'll do it like Trump on the tarmac. Nobody knows airport speeches better than I do. That's what you got to do. Tarmac speeches. All right. Let's focus. Jeez. Okay. All right. So let's write this down. TSMC. Okay. So stable margin and capex. Growth expectations. Somebody says you'd really be wasting your time coming to London. You say that, but you'd be surprised because yes, international investors can invest, but what's surprising is one of my top viewership markets is actually London. Like my top view, I think it's just financial base, right? Because I mean, y'all know this. We don't talk like we're educating, 14-year-olds on, ghetto rush, make sure the dollar cost average, whatever. We're not doing that. So usually what we're talking about is just a higher level of finance. And so it doesn't really surprise me that when we looked at the cities yesterday of the demo of who watches, it's like Manhattan, London, Toronto, LA, right? These are financial capitals, frankly. And so that doesn't really surprise me. But anyway, okay, so let's take a peek at what they're saying over here.
You think about it that way. And so long term, I predict people will do very well. And I think the point I was trying to make to Andrew through Twitter and here on the show is that, yeah, sure, it's 14 years old, but it's still very young in terms of the adoption.
In terms of adoption vis-a-vis the ETF, you look out your 4-year sort of time horizon, what percentage of Bitcoin effectively is owned by BlackRock on behalf of individuals versus individuals owning it themselves?
It's a good question. So let's say there's 15 or 20 billion now, just using rough numbers, and the asset's got a $1.4 trillion in market capitalization. And let's say it went up 5x from that. And let's say the market capitalization didn't move, it's still less than 10% of the overall ownership of Bitcoin. So this whole notion that the ETFs are going to overly centralize Bitcoin, I don't buy. I think what the ETFs are, though, is they're a great conduit for people that are used to buying them.
Does the ETF create more price discovery? I mean, in some ways, you think it should create more price discovery, which in some
ways... Well, it obviously has, though, Andrew. Look, I mean, I think we were... 40,
well, but in the initial stages, the discovery will always be about adoption, so it should go up. The question is, long term, does it create a sort of different sense of discovery? And you also have to think that the people who own Bitcoin today were always true believers, right? It was sort of a special cohort of people who sort of thought about Bitcoin in an unusual way. I don't know in the future if you have a large volume of Americans owning it through ETFs, hopefully they won't all be true believers in truth. You'd want them to all think different things about it. Well, and I don't know what that means.
Well, listen, I mean, you guys have a lot of skepticism on the desk. I think the skepticism is well-founded. I started out as a skeptic. I think what got me past being a skeptic is the notion that this is immutable. It's decentralized in a way that makes it very powerful. The network itself is scaling. And if you think about the way we treat money in our society over the last 5,000 years, Bitcoin checks all of the boxes. The only box
this guy was the former White House communications director. And after that, he started his own fund, Skybridge Capital. Well, I guess he's had Skybridge for a while, but he basically went back to his fund after working for Trump. And the amount of funding that I believe they got after he worked for Trump was insane. It was sort of like Treasury Secretary Mnuchin, just gets billions of dollars from the Saudis. It's like, as soon as you go work in the White House, the amount of money they just throw at you, like, please go manage my money. It's insane. It's crazy. And they've made a lot of crypto investments here, Scaramucci, so, it's not a surprise. Oh, yeah, of course.
Just so you know.
You'll be long at 100,000.
Mike Santoli, John Ford, thank you guys
100,000.
for hanging out with us. We want to hand it over to our friends on Squawk on the Street right now.
Oh, they're transitioning. Okay, fine. So let's see what else is moving in the AM. So we talked about, what's it called? Insider trade. Yeah. So Taiwan Semi's down 3. You've got Tesla down 2. You've got Etsy down. So Etsy and Tesla are down on downgrades. You've got ARM is breaking down. What's crazy, you have a big downgrade on this. I had a giant put on this that I held for I feel like a month. And I was just getting eaten away by theta decay, even though the stock was decaying. I had a $90 price target on this, a lower than $90 price target on this for June. I got burned by theta decay, so I lost money on that AI option. But I was using that as a hedge because I'm I kind of think AI is going to top out here, and I think shorting ARM would be great. That was the good in idea, but again, hard in execution because you just don't know when that drop is going to come. Sure enough, yesterday after ASML's earnings, this sucker dropped 10%, and then out of nowhere, it dropped another 2% going into the close, which that sucked as well. But anyway, crazy movements on ARM. Something that you have to know about ARM is there's only a 10% float on this sucker. So, Ryan says, I made money on those $90 ARM puts. Dude, good for you, man. Let's go. So it must have gone profitable for you yesterday. Just because of the crazy move yesterday must have driven that profitable. That's awesome, dude. I'm really happy to hear that. Yeah, remember, I in my Stocks and Site group, I send trade alerts because of things that I see or things I think are coming. Ultimately, you have to kind of make your own decision as to when do you hold, which trades do you make, or whatever. But there are a lot of people that didn't see that signal. Thanks, Kevin. They pick up the signal. They make their own trades off the signal. Don't copy me. I'm not professing if you copy me, I'm going to make you money, right? No way. Hopefully, but the ideas, I think are right. It's just executing it. It's tough because I do think, and I'm just being transparent about this here, I do think that ARM is going to drop substantially more. I don't have any shorts on ARM right now. I wish I had shorts yesterday, obviously, but I don't have any shorts on ARM right now. And so I think it's actually going to go down substantially further. And mostly because I never thought it was well valued at IPO. I think this has a very real potential of going into the 80s, which is why I was looking at $90 puts. So, at the time, when I bought the $90 puts, it was $130 stock. And it was oh, you're out of your mind, $90. It's I don't think I am. But again, the theta decay just eats you away. So you could be right on direction, just wrong on timing, and then you're screwed. So, that's just the nature of playing the game. But why is 10% bad? Well, I guess I should say it's bad because if you have one entity that's holding basically 90%, you have very few people who are actively trading the stock. So it's kind of like SPACs. Most SPACs only had a 10 to 12% float. So what ends up happening is, when there's selling pressure, you have your 90% hodler, and then there's selling pressure amongst the 10% and no buying pressure. The stock just freaking plummets. Just plummets. So, but anyway, yeah, right now, this market is very puttable. You do have BTC trying to rebound today, so you have to kind of be careful. Sometimes BTC is a leading trade indicator. Yesterday BTC and Tesla were leading indicators of what was going on. You just had to react very quickly to them, which worked great in the first part of the day for me. Not so great at the end because I was too slow. Oh well. So what else is going on? So we've got Astera Labs, Rivian, Applied Materials, ASML, Apple. Wow, Apple's at 167 now. Ouch. I thought buying it at 169 was a good deal. Ow. Jay punched. Okay. What's going up? Petco. Well, this one's been crazy because it's at $1, so it moves very volatilely. Open Door. I had a dream yesterday that this was $11. And I woke up in the middle of the night sweating how the hell are they $11? And I look at my phone, I'm like, oh, they're still $2. Good. Because I'm so, like, I don't have any positions on Open Door, but I'm so bearish about the company. I'm like, it can't be. It ripped me out of my sleep. It's so bad. That's when you know you're looking at charts too much. Your blood pressure changes in the middle of the night based on, you know, what your dreams are saying. Anyway, let's see what's going on with cheesecake. Let's see here. Alrighty. Cake. Cheesecake. U.S. and Israel to hold talks on Rafah. Cool. ECB sees June rate cuts barring any surprises. Well, somebody from the ECB thinks that. Yeah. Our concern is what the Fed does. Or rather, how long the Fed decides to wait. Favorite cheesecake? Boy, it's been a while since I've had cheesecake from the Cheesecake Factory, but you know they have so many good ones. Oh, probably the top ones would be like Red Velvet. Oreo's pretty good. All right, cheesecake. Oh yeah, cheesecake had a observed sales rise. That's right. Okay, and then that was cheesecake. Let's see here. Kevin, you're holding cash to buy the dip on what? Honestly, everything, really. Like I think I don't want to be very bearish. I really don't. Like it's so much more fun to be a bull. I've only been bearish for, you know, since the beginning of March. But I don't think what's happening at Tesla is just a Tesla problem. I think it's much more broad-based than that. And I think the risk return to making purchases right now is pretty terrible. So, but, oh well. So, let's see here. Okay, Bowman's talking right now, but doesn't comment on monetary policy, just talks about bank supervision. That's boring. So, nothing new there. Fine then. What about... Let's see what else we have. Barclays. Oh, Barclays and RBC Capital also cut their price targets for Tesla. So for Tesla, we have the DB piece. So if we recall that, Deutsche Bank cuts price target to 123. Then we have Barclays cuts price target to 180. And RBC cuts price target to 294. The Deutsche Bank piece was mostly based on losing the Model 2. All right, let's see here. Mostly based on losing Model 2 and uncertain bet on Robotaxi which they believe will face significant operational, technological, and regulatory hurdles. Boy, I think I spelled that all correctly. All right. Let's see here. Adam Jonas from Morgan Stanley. We expect Tesla's announced headcount cuts to potentially exceed the 10%. It's not just Tesla, though. Ford and GM are cutting. Let's see here. Auto companies have spent tens of billions of dollars on combined FX for EV projects that will not deliver. That's true. Billions of dollars of charges at GM and Ford. Yet to forecast those at Tesla. Oh, yeah, that wouldn't be good. Competitor exits. Most recessions feature not only a rationalization of capacity, but also a rationalization of competitors. Fisker was the most recent example of this, but in our opinion, it may not be the last. Survival is winning. Yeah, honestly, that's something that is very possible. That, you know, what happens if you get a recession, which the yield curve is telling us a recession is coming, right? So as soon as jobs roll, we're screwed. So you get a recession, Tesla will survive, but how much is the market going to drop? And then what happens is the time to buy is when JPOW just cuts everything back to zero. But the problem is how much money you're going to have left by then. You know, if you diamond-handed until then, the answer might be not much. Oh. So, I don't know. We'll see. I just think it's prudent to be prepared. We believe Tesla has significant attributes to be valued as an AI beneficiary, but the company must see a stabilization and negative earnings revision within autos first. They're still reiterating their 310 price target. Okay, interesting. So Morgan Stanley sticks with 310 price target, and they do argue. In fact, our value. Let's see here. Negative. At the same time, we believe investors should not ignore the continued development of Tesla's other plays, of course. Oh, the process may take a few. Okay, yeah, this is the bad part. So this is kind of what DB mentioned as well. We do not believe Tesla will get credit for an AI company as long as core autos are being revised down. No credit for AI as long as core autos are revised down. Process may take a few more quarters. And the price of $100 bear case may be in play. $100 share price may be in play. Yeah, I mean, basically, you know, what Deutsche Bank was saying, which is an interesting thought, is this idea that you need to find new investors, basically. Like, you're going to shake out the people who look at Tesla as a high-growth auto manufacturer that's going to get to 10 to 20 million vehicles. You shake out those investors, and then you basically try to recruit new investors who are into AI, but they might not be convinced until prices are lower. So that's interesting. All right, back to the sticks here. NVIDIA almost back to 850. It trading under 850 isn't great. That's a pretty big support line for it. So we'll see what happens there. Aside from big tech and AI, the rest of the market hasn't been that great. I don't think we're due for a huge correction, maybe a 5 to 10% pullback. Yeah, well, you know, my concern is that what we really had was we were probably going to have a little bit of a rougher 2023 had it not been for AI. But we ended up getting a pretty good 2023 because of AI. And the question is, you know, if that growth goes away, was that just sort of like a stimmy shot? I don't know.
But we're not going to get that. Did you know we used to read the Lord's Prayer? Did you know we used to read the Lord's Prayer in elementary school?
That's great. It's good to know. And the Pledge of Allegiance, I remember that.
When we come back, it's been 4 years since.
Why do we switch to that channel? It's the music. It's you know, the
Do you have any concerns that they'll lean towards the FX market?
Snazzy music. What do we got over here? That's a fancy place.
That we haven't seen signs of that. But what I do believe is that, yes, if China builds overcapacity and pushes export that create reciprocity of action, and then we are in a world of more fragmentation, not less, that ultimately is not good for China. China wants an integrated global economy. Therefore, what I want to see China doing is to get...
So she's from the IMF, and she, by the way, just said that she's still optimistic that the Fed will be able to cut rates in 2024. A lot of people on Wall Street are starting to basically just unprice all cuts.
Things to do. Let's continue this conversation through the year. Kristalina, thank you so much and congratulations.
Yeah, she's taking off. All right, that's fine. Might be old news, but I just saw Tesla made FSD $99 a month. Yeah, it's okay. It's okay. You're a little behind, but that's all right. It's what, 3 days old, 4 days old now. But yeah, I mean, let's just touch on it. Yeah, it's great. You know, I think they announced that like Friday night or Saturday night or something. I made a video when I was in Fort Lauderdale on it. Yeah, it's nice. It's more accessible, and so the hope is that drives more purchases. You know, and is finally able to sort of stop the slowing autos growth, hopefully. So is Palantir technically in danger? Well, technically, if the market corrects, everything's in danger. Like there's no real safe stock if you go through a correction. Unfortunately, it's everything corrects. You know, there's a reason we've been packing on the cash. I mean, it's just because it's my opinion. But, yeah, I mean, who do we have for earnings today? Later today, we have Netflix. You know, they're usually the harbinger of doom. Yeah, Netflix comes out today after the bell. What they do for the rest of the market is actually pretty remarkable. They just set the stage for earnings season. So you really want to hope that Netflix just beats across the board. Let's see what Netflix's expected vol is today. It's going to be crazy. So, let's see here. Yeah, I don't know that anything's going to happen with Israel until Passover is over. Oh, yeah, the expected volatility on Netflix today is 8.7%, which is actually lower than usual, but it's still a lot. SQQQ might be safe. You have to be careful because, you know, you get a few green days. Like, in every correction, you get green days. And, you know, people get smoked holding those triple leverage down plays on those random green days, you know. Because, you know, your option values can get wrecked. And a lot can happen. But, yeah, I mean, theoretically, sure, a triple short on the Qs could be an interesting play. Let's see where it is right now. So, yeah, I mean, you're basically at the bottom. But that's what happens with these short plays. And they usually do a reverse split because of that. So you go out on the day chart. I mean, yeah, maybe. You know, maybe the way to hedge is some out-of-the-money SQQQ calls. You know, go dive into here and go out. If you think there's going to be some crash, you know, just go out to, I don't know, how much is this going to cost you? Go out to the end of the year. Pick up some cheap call. Oh, the pricing isn't up right now. It's like, pick up some cheap calls, you know. I don't know. Let's go out a little more. Get some cheap, like, $20 calls or something. Yeah, duh. You know, but that's a double. No, that's probably too much. Because you'd have to have, well, this moves at a 3x. Double. So you'd have to have a 30%. No, you'd have to have like a 25% move in the Qs. Yeah, that's probably too far out. Yeah, you'd probably be more, you'd probably bet for more of like a 20% drop, but hedge yourself. So go for like a 12% correction in the Qs. Times 3 is 36%. From here, call it $12 times 136. Yeah, $16. So you probably want to go 15. You know, $15 calls on the triple Qs. But again, you know, then you've got theta decay, and at that point, it's like, do you just hold the shares, right? It's an option. Somebody here says TQQQ puts are better. Maybe. It's an option too. All right, so where are we with BTC right now? Because I always like looking at BTC as a leading indicator. And we got 13 minutes to the bell. We got 77 bips here on NVIDIA. We have a coupon expiration tomorrow. Y'all already know about this, but I'll just put the banner at the bottom. See, the nice thing about the banner at the bottom is I don't have to say it as much. Nope, that's the wrong one. This one. There we go. All right. Excuse me. Okay, so Tesla's like tanking into the open right now, and so is TSM. I promise you, I seek not to be bearish, but I'm not happy. You know, yesterday, and like I look at it and I understand. You know, there are people who are just like meanies, but somebody wrote, if you're raising cash, why would you pray that you're wrong about a recession? Do you buy stocks and pray they go down? Clown. So he called me a clown for saying that I pray that I'm wrong about a recession. And I think he missed the point. So I replied to that and said, the joblessness and recession that hits would be way worse. And I actually agree with that. Like, it's not, like, I'd rather have no worries and just buy back, right? Because then you don't have to worry about, okay, well, if you have a recession that's around the corner, you need to make sure that you're in a position, like, you know, wherever your job is, or if you're running startups or whatever, you got to have runway to take advantage of opportunities during the recession, but also to make sure that, you know, you don't lose great staff or whatever. So I think it's very important to be prudent about potential risks, especially with the market being how toppy it is right now. But yeah, I don't wish that upon anyone. I think recessions are very painful. And everybody always looks at 08. It's like, oh, I would have bought a house after 08. I would have bought stocks after 08. I remember that time. You know, after, like, I lived through that. I remember the job losses. I remember trying to sell real estate, you know, in 2010 and 11 and the hell that it was. You know, nobody had money. There was plenty of inventory. rates were like 4% on a 30-year mortgage. There were like 400 homes on the market in my city compared to the like 60 homes you have on the market right now. So you had like people would come to me like, yeah, I'm looking for a 3 and 2. I'm like, here, let me take out the list. And I'd pull out one of those Egyptian scrolls. Where should we start? You know? Now it's like somebody's like, you want a 3 and 2? I'll call you when one hits the market. So, you know, like, I don't know, everybody has this impression. I was like 19. You're right, Andrew. You're right. I'm not saying, didn't say I wasn't young. I still lived through it. So, but the point is, it's painful, you know? It's painful for a lot of people. Very, very, very painful. So, anyway. Kevin is the only dude who reads hate comments and then explains why, how he thinks versus just bash back. What are you trying to say? I'm just kidding. No, thank you for saying that. That's nice. Okay, all right. Let's focus here. I mean, we're obviously getting a drop going into the open here. I don't know if that's going to hold into the open. I'm going to make my little list. I hope I don't get screwed, but I'm going to make my little list. Wall Street Journal piece on Amazon spying. Which, I don't, let's see. Wall Street Journal, Amazon. Amazon, inside. Oh, inside Amazon's secret operation to gather intel on rivals. Oh, that's interesting. Take a quick look at that. Inside Amazon's secret operation to gather intel, staff went undercover on Walmart, eBay, and other marketplaces as third-party sellers, as a third-party seller called Big River. The mission, to scoop up information on pricing, logistics, and business practices. I mean, like, doesn't every company do that? That doesn't surprise me. All right. Corporate espionage. I wish I was 10 in 2010. So, all right. Okay. So, okay, you want share ideas? You want trade ideas so you can make money to buy the course? Okay. If you make money, you got to promise to buy the course. So yesterday DJT was up 15%. I think there's a good chance this is going to be a short today. This stock has like these like random 1 to 2 day periods. So you have to be careful. Could be a 2 day period where it runs, but it usually runs in the pre-market with it. Otherwise, it's like typically straight down. And given that it's down in the pre-market, let's just say I'm gonna make my little Santa Claus list, my Santa Claus list. Okay, who remembers what this is from? Who's in charge here? And then everybody points at Santa Claus. Hopefully nobody. Okay, so that's gonna be interesting. So DJT, what's going on with, yeah, Elf Cosmetics, speaking of elves. Yeah, Elf has been on a downtrend a little bit, and this was after the warning that you got from, what's it called, Ulta. Ulta actually warned on weaker sales. On the course, can you buy and show us how you do so we can kind of like... Yeah, we actually do that in the live streams. Like I said, I like... My goal is to teach. Obviously, the goal is to make money as well. But I can't guarantee that. I can't make any guarantees that every trade's going to work. But the goal is really to teach. So, like, when I screw up a trade, we'll talk about it in our course member live stream. I go, here's what went wrong. Here are the lessons to learn. Here's how we can do something different in the future and not do that again, right? So I think that's the education, I think, is very valuable. That's the whole point of it. Okay, DJT. The tough thing here is trying to figure out where your levels are on this. And I think you've got... Oh, that looks pretty juicy right here. At least on the hour chart. I'm going to put a yellow across here. So if we get a little bit of a bounce at the open, it's possible that you could have an entry at about 28.5, somewhere around there. Oh, come on. I did horizontal. Apparently not. And doing this on a little Mac while live is much more challenging than trying to do this on TradingView on my other devices. Yeah, and then you're looking at that bottom there around 22. So you're trying to get $4 out of it or a little more. Okay, what about Tesla? So Tesla's at a tough spot right now. Tesla, we have a line drawn here at 152.32. So technically you should have a little bit of a bounce up. If you have a bounce to Tesla to 142, so ideally under 28 for DJT would be nice. Tesla, if I get rejected at 152, I think that's probably a decent spot. AMC, you gotta be careful. It didn't have a lot of momentum yesterday, but it did go from that 6% to 9%. Is Kevin the only person laughing at yours? Oh my gosh, you would know. Like, you would be laughing too if you knew what it was from. It's not another Bourne reference. This guy, John Blake, shout out to you. I think you're the only person who got it. That's crazy. Good for you. That's an OG right there. You know what? If you don't already have a course, email us at staff@meetkevin.com for a free course, John. But you have to prove with this is actually your account somehow. Dude, we're gonna get like 50 emails. Don't do it. Don't. Or you know what? Leave a comment. Leave a comment on this live stream with your email. The real value of being a course member of the live streams. Oh, thank you, Urban. That's really nice of you to say. Yeah, I mean, yesterday we had like an hour-long live stream. Again, there were like 900 people there. Bit confused about your current macro take. You think the chances of a recession are now higher, but you also think the Fed will stay high because of economic strengths. Can you clarify? Yeah, so that's actually what drives the recession. So, you're exactly right. So what we really ought to be doing at this point is lowering rates. But because now we're getting sticky signs of inflation, there's a really good chance the Fed is going to delay rate cuts until September, November, or next year. And that pain is going to lead, in my opinion, to more layoffs. And as soon as that cycle starts of layoffs and earnings all year that are going to come in below expectations, you're screwed. Why do I think earnings come in below expectations? Because 2023 was a great beat. But now we're comparing to 2023. Every single quarter this year, we have to compare to the sexiness that was 2023. Good luck, man. There's going to be so much demand to, basically cut jobs. It's going to be nuts. Absolutely nuts. Let's see comments here. Been a course member since 2020. Worth it. Oh, awesome. Glad to hear that. The Santa Claus. Hey, kid, who's in charge here? Stop. All right. Fed Williams. We have a strong economy. You know, Jay Powell, like 2 days ago, said this time is different, right? Like, he was at the event, and he's like, we want to be cautious about saying it, but, it certainly feels like this time is different. I know. Jay, not again. Not another rug. We've had enough ruggings. Can we just go back to normal, please? Anyway, monetary policy working the way we hope, says Fed Williams. We don't feel an urgency to cut rates. Yeah, we recognize that. Great. All right. Well, we're getting up to bell time here. Oh, boy. All right. So, what do we got? About 40 seconds to go until bell time? All right. Very well. So, let's get ready for the bell. Okie dokie. So, what are we gonna watch? Tesla at the open, the Q's at the open. Let's get it all ready. Get your trains ready. Oh man.
He looked at the whole Have you looked at the on? Love them. Okay. A lot of love here.
This is real-time exchange. And the big board today, it's digital marketing platform Ibotta celebrating an IPO today. We'll talk to the CEO at 11 a.m. Eastern on Money Movers. At the NASDAQ, it's biotech Sky Bioscience celebrating its recent listing. Jim, on Ibotta, 6.6 million shares at 88. That's going to be above the range.
You know what? I like this. It's the biotechs that are leading us. When I go back over what Morgan Stanley said about the IPOs and what Goldman Sachs said about the IPOs, it's going to start with these companies first because people now realize, a la the Horizon Therapeutics deal with Amgen, that you can get capital.
All right, so what do we got over here? Let's see. We have the Qs are trying to move up. You've got, well, actually, excuse me, the Qs are trying to move down a little. You've got Tesla trying. It's really trying to get up. I don't know if it can get it up. Whoa, TSM's down 4-5. Holy crap. Get out of the AI trade is what that's screaming. ARM is down another couple percent. Super Micro is up 1%. Now that's bizarre. I made some money shorting that sucker yesterday, although I got beat up on another trade. Oh, look at that on NVIDIA. It's almost like a perfect reject. Right there, 850, boom, straight down. So I'm waiting for this rejection at 152 on Tesla. The Qs are collapsing. It looks like driven by, New York Community Bank drops another percent. What else is moving here? Etsy. Oh, Etsy's recovering. Okay. Etsy's trying to get back to 66.7. So I'm going to write that down. Etsy 667. I'm going to watch that. Respect the lines. It's very simple game. Okay. Play. Wow, Dave & Buster's has really been bleeding out. They ran up to $66 and then everybody's like, cool, I made my money. Bye. Apple's trying to recover. So that's good. That's interesting. Even after a weak TSM on smartphones, I would have expected the opposite. Open door down. End phase down. Oh, look at that perfect rejection again. 113. Follow the lines. The lines will do your biddings for you. Obviously, the NVIDIA 850. Big line right here. Amazon's rotating down. Wow, back to 180. Oh, man, ARM tanks another 3%. Oh, schnapolas. And then you've got, there goes DJT. And then the Qs just turned negative. Tesla's got to bounce here at one whatever this is, I suspect. So I'm going to watch this. And then watch ARM as well. Let's see what kind of bounce action you get on ARM. Very interesting. Super Micro turns red. Okay. Reload the short shotgun. Yeah, see, NVIDIA's going to bounce here. And then watch, it's going to go try to test 850 again. That's where you short this sucker. Tesla, come on. And the Qs just went red. Yeah, unfortunately, this is just a crappy time. But let's see what actual news there is. Let's see here. Is BTC moving up? Let's see. Oh, yeah, AMC just dropped. And then BTC US Dizzles. BTC US Dizzles. Oh, it is moving up. Yeah, you are actually moving up a little bit on this. So that's good. Let's see. None of the S&P 500 is overbought for the first time this year. Wow. I'm going to write that one down. So... okay. Let's see. So, the overbought conditions have been pretty much all year long. That's an interesting headline, though. So, first time no sector of the S&P 500 is overbought this year. Okay. Very well. Let's see here. Oh, it wants to move down early. It didn't quite make it there yet. Well, I guess the wicks are making it to 152. Interesting. And then you've got, Palantir rotating down. SPY still moving down. ARM's still moving down. Coin's moving up. Coin's going back to its 218. That's a level. Watch that. Coin 218. Easy usual short, but you can break through it. So you watch that one. SMCI is getting pooped. We're not going to get any rebound in the AM. It's just going to be straight down on earnings today. Okay. Yeah, we'll see about that. And Apple wants to climb. Apple's just going back to 169. Yeah. Okay. Is Meta pumping? Is that true? Let's see. Meta. Nice. Okay. The Qs just keep dropping. Again, we'll see if we get a bounce, but right now it looks like the answer is straight down. Let's listen in for a moment, see what we got.
Well, that is certainly a key criticism from their competitors at the big banks, who are obviously under a far stricter regulatory regime than are those who are able to extend private credit, to your point. The rejoinder from private credit would, of course, be we take the risk ourselves. We're not syndicating this broadly. We are buying this risk, and we are fully underwriting it, doing the diligence that we need to, and completely comfortable.
Fed Williams, we still have work to do to lower inflation. Yeah, I mean, that's not a surprise. And then, I mean, the patience for cutting rates. Rate hike is not the baseline, but possible if the data warrants. That's actually the first time we've heard that in a minute about actually getting hikes.
It's up 7% year over year. That's not bad. So, all right, we'll write it in the book there. 121.42 is where I'm going to put you down as a buyer, Jim, on Blackstone.
I'm in. I'm committed. They have the best part of the gross domestic product as their company portfolio. I like it. And I like what Jonathan Gray said about the Fed. And Carl, I do believe I'm beginning to get, for the first time, I'm getting some chinks in the so-called unbelievably strong economy. Not enough yet to define things. Not enough.
Oh no, Kramer's starting to see it. No.
We need.
I'll tell you one thing, Jim. Wells is out. Chris Harvey, pretty interesting note about how Q1 earnings so far have been a negative catalyst in their view for large cap. And they go through all the negative commentary from ConAgra, JB Hunt, Lulu, Fastenal, CarMax, Walgreens, FedEx. Hasn't all been roses.
Holy cow, that is a very good list. I mean, some people this morning think that CSX isn't that good. I thought it was fine. It was indeed an inline number. But, wow, that is a surprisingly strong list of companies that are not delivering. And I don't know. I think that making a strong case for some company. Look at that CSX. It's actually not a bad quarter. I would go so far as to say that we've got some companies that I don't want to own because they're slowing. And you know what, David? Maybe March was the month that wasn't that good. And what I want to call people's attention to, that something that's been entirely overlooked by our network, David, Prologis. Do you know they're the largest real estate owner in the world? They own 5%.
Yeah, I thought Blackstone was actually the largest real estate owner, but...
Well, you know, look, let's just divide them up.
BTC moving down now. And so that's pretty big. Now you're united in the bearishness. Everything's moving down now. Everything is selling off now. Now you have a joint sell-off. Now's the time to look at potentially shorting some of these other plays. But wow, you know, the Tesla short would have paid off if you got that at open. The DJT short would have paid off. So you got to buy the course if you wanted free trade ideas. I gave them. Both of them basically did what we said. Meta's actually up. How weird. Why? And then BTC keeps tanking. So honestly, like here's potentially another one, and you could insulate yourself so there's less pain. Go to potentially go to like 217 on Coinbase, and then you could get a bounce here though, so be careful. But you could go for a 217 The problem with Coinbase, I will say, is Coinbase has like really bad spreads on options, so I don't usually love that one. Some of the ones that have really good spreads, like Tesla, option spreads are fantastic. And after the split, it's been a lot more lucrative to look at Tesla. But it looks like market's kind of chilling out right now. So what I always like to do is kind of just wait for like the first bounce of the day and then reload the shotgun. So, but it doesn't, I don't know if you're getting a bounce on Tesla right now. This sucker's down almost 4%, but it looks like the Qs are trying to set up. Let's go to the unaveraged candles. Usually if you're trading, you really want to go unaveraged candlesticks because otherwise you're gonna miss the turn. TSM's down 6%. That's pretty brutal right now. ARM's down 4. ARM's not even moving down. Well, yeah, ARM's moving down a little bit more than Super Micro, but yeah, this is a pretty severe down day here. You do have NVIDIA trying to recover, try to get back to that 850. Let's see if we could get a solid bounce here. That way you're not chasing. Though I find the worst thing to do in trading is chasing, where like you have an idea. Somebody here says, I made 50% on Tesla. Nice, good job, man. Yeah, buy the course. We made the deal. Coupon expires tomorrow. But one of the things I find is a bad thing to do in trading is chasing. So it's kind of like if you had an idea and then it plays out and you're like, oh, now I'm going to chase it because it's going to keep going. Find a different idea. But it's very normal that in the first 15 minutes you're going to get a bounce. And there's plenty of time left in the day for volatility. And clearly the VIX, the VIX should be up on this. Let's see what's going on here. VIX... wow, the VIX is... well, the VIX might take 15 minutes to update. I don't think this is actually fully updated yet. So let's give the VIX a little bit of time to update. We'll see what happens. So even Tesla's recovering now. Qs are recovering. DJT's recovering. Market is recovering. Everything is getting better again. It's fine. Nothing to see here. It'll come right back down. It's been a nasty market. So, anyway, where were we? So, let's see here. Copper picks up. Odd moment in secular bull market to rally. Okay, well, because it's not a secular bull market anymore. Erratic Philly Fed surges to highest level. Philly Fed rose. Yeah, well, like they say, you can't really take it seriously because it's up and down like crazy all the time. Fed Williams suggests economy is on pre-pandemic growth track. Still watching performance of China's economy. Okay. Let's see. What else is going on? Russia tightens travel rules. Fine. Vanguard warns 10-year yield risks bouncing back to 5%. Really? What are we at now? Oh, well, we're at 462. Let's see here. Rents are the Fed's biggest stumbling block. Well, yeah, because again, it takes so long for people to roll over because you have to move, right? So AI is going to add a lot of demand for copper, and that was never really modeled before the AI boom. Yeah, there's definitely a lot of power that's required. Well, that's a good point. All the Tesla insiders are dumping before earnings because they know it's going to be horrible. I don't know. I generally don't play earnings because they're so erratic. But honestly, if I was going to play hold earnings, I think you just have to bet everything's going to go down. Like, but I don't know. Who knows? I mean, even companies that are beating, you're seeing the downs. So, the downs. That sounds like not PC to say that. Wow, dude, Tesla is just getting absolutely smoked. Absolutely destroyed. Yeah. BTC actually up again. Very nice. So, coin's stable around that 215. And we'll see how the rest of the day moves. But based on how some of the day is moving, it don't look very good. But Qs are trying to recover. Tesla tried to recover too, but I don't know. Let's let the first 30 minutes go, I suppose. Whew, crazy. Okie dokie. What else do we have? Let's see what they're talking about
A lot
here.
of people feel that the $6 billion they got is no shocker because they built in America the whole time. So, David, again, if it's a good stock announcing good things, it's not doing anything for the stock. If it has any chink, meaning it's not guiding up, it's bad. And if it's guiding lower, like Prologis and JB Hunt, well, it seems to go down day after day. The only stock that's got any mojo is United Health.
UNH, yes.
Mojo per share. You use that mojo per share. You're there,
Of course,
right?
no, that's a well-known metric, and one that.
Thank you.
You're very low multiple mojo per share. That stock is up over 3%. Jim, I do want to come to you on Netflix. Stock's down 1%, but up 25% going into tonight's earnings. Again, on the strength, really, of the last earnings report, which just blew it out. What are your expectations here?
Well, I do think that they've got that two-tiered model that a lot of people really like. In the new frugality, people are willing to see commercials.
Yeah, let's see about that.
That mean Netflix can be very good. The number, when you have more than 200 million people involved, like 250 million, and maybe a lot of them are willing to pay that, willing to see the commercials, and Netflix figures out the commercial model, which they hadn't yet, then maybe the price is justified. But they have to be able to say, we cracked the code on what commercials people want, what the advertisers really want. In that case, it can go higher. But, David, if it hasn't cracked the code, then the stock will not round.
I hate it. Like, Amazon introduced commercials, and it's so gross. I had to, go onto my computer and figure out how do I, get this out of my life. It's so disgusting. And I'm like, ew. Who wants to watch a show and in the middle of the show get an ad? The only way you would do that is if you're basically not the one watching and you're buying it because of your kids. That's the only way, in my opinion. And then it's the kids can watch the ads. Yeah, that's no bueno. So anyway, Qs continue to recover. So you are getting a nice recovery right here. And, you're still down, but let's see what happens. And then Tesla's trying to recover. BTC is signaling up right now. So there's the VIX. The VIX finally updated up, of course. Oh, wow, AMC giving up the chunk of growth from yesterday. Momentum seems to have gone elsewhere. You've got Amazon. It's only down 15 bips. Wow, Nvidia goes green again. Watch that 250 or 850 level. End phase. Wow. You're between levels over here on end phase. Yeah. Oh, boy. It's just rough. Rough time in the markets, and I don't think it's gonna get better. What's Wingstop doing? It's probably up. I hate that thing. It's like the most overpriced stock ever. And it's down 3 bips. Good, loser. Sorry. I get passionate about hating on them because they suck. Is that wrong to say? No, that's my opinion. All right.
500,000 acres all set.
He's ready.
Harry Potter.
It's beautiful. You should see it.
Yes.
Yeah, it's incredible. That
The
land
land of
has.
enchantment / Comcast.
Busy day in fixed income and bonds. We'll get existing homes and LEI at the top of the hour. Also, decent diet of Fed speak today. Bowman, Williams, Bostic, twice. 10-year 4.62. Don't go anywhere.
Oh, yeah. We will. There we go.
Analysts are expecting streaming leader to register another strong quarter of growth in subscribers following a crackdown on account sharing. Geeta Raghunathan is from Bloomberg Intelligence. So all eyes down on the subscriber growth. Where will the alpha of growth come from geographically, Geeta?
Yeah, Manas, it's always kind of been more on the international side. So the U.S. is a pretty mature market right now. That said, there are new initiatives, both with the ad tier as well as the paid sharing, where they're cracking down on passwords.
Yeah, that's a good point. You got to get people watching Netflix in India and other places around the world. That's how you boost the growth numbers. My wife bought me YouTube Premium years ago because she was tired of me bitching every time an ad came on. See, your wife's smart.
I mean, they've got multiple growth drivers. I'm just curious, how does pricing going to play into this? I mean, I look at my own TV. I think I've got Amazon Prime, I've got Apple TV, I've got my Netflix. I'm a multi-channel. But even I'm nearing the limit of what I want on the television in front of me. I'm not that price sensitive, but tell me about the rest of the market.
Yes, I think what Netflix has managed to do is in many ways, Manus, they have really won the streaming wars, and they have kind of become this de facto option right now for most households across the world. I mean, if you're thinking of entertainment or what do I watch today, I mean, you kind of tend to gravitate towards Netflix, and that's what they can really bank on when it comes to pricing power. So they definitely have the edge relative to their rivals. And if you just kind of think about, the U.S. itself, their standard plan, which costs about $15.50 a month, the last time they raised prices on that was back more than 2 years ago, January of 2022. So obviously we're due for a raise there. And I think what really kind of gives investor comfort in terms of are they able to raise prices? I think yes, it's a resounding yes, because now they have this lower priced advertising option. So anybody who's very price sensitive, obviously they can control churn because you do have that lower priced option now for $7 a month in the US.
Okay, Geeta, thank you very much. Let's see what the numbers say tonight. And who out there doesn't press yes when it just comes up, the price has risen, do you want to continue with your subscription? The bond market matters. Listen to it more. That was the message from CalSTRS who were with me just a little bit earlier. Now, yields are popping ever so slightly higher. The US jobless claims come in at 212,000. The estimate was for 215. So a solid jobs market. Another reason for the Fed to obfuscate, to extend and pretend. But I'm drawn to Williams' comments from the Federal Reserve, where he says rate hike is not the baseline, but possible if the data warrants it. So again, they're trying to reaffirm that rate hikes are not our baseline. But he does go on to give you the counterbalance. So the bid and the offer, which is they will cut rates at some point. The economy will drive the timing. So there's a number of facets in this bond market this morning. Monetary policy is working the way we hoped. Those are the lines coming from William.
Yeah, and we may raise rates again. That's not what J-Powell says. I don't think J-Powell wants to raise rates, but he's definitely down for delaying. So gold's still below 2,400. You've got oil at only 87.31, discount from that $91 we saw a while ago. And then we've got DJT recovering right now to almost where it's opened. And some of these plays are just inviting for new shorts. Yeah, then you've got Palantir's down another almost 2%. My goodness. S&P 500 goes green briefly. ARM's only down 2.3 right now. Some of the intense selling has sort of relaxed a little bit. We'll see if that's just an opportunity to, as I like to say, reload the short shotgun, as we're kind of doing the same thing over here on NVIDIA. Here's Etsy. So, okay, very well. Let's take a brief listen over here. And then we'll go to El Course Member live stream. Let's see they're on commercial. Okay, very well. Fine. We won't go over there. So, let's see. What else? I want to see what the 5-year break-even is doing this morning. It's one I like to look at regularly, mostly because, to me, it's kind of a leading tell of what you expect J-Pow to do. Generally, when it plummets, he ends up getting pretty bullish and dovish, and when it skyrockets, he gets a little more bearish. Now, whether the market responds the way you think it does, well, that's something else. That's sort of like, what was it, 2 days ago when J-Pow's talking, I'm like, what the hell? This is like super bearish. It took a whole day for the market to actually repair to that bearishness. I'm like, thanks. But anyway, yeah, so 5-year break-even is back up today. Actually, no, it's basically stable today, 2.52-ish. That's where we sit right now on the 5-year break. And looks like we'll be going to, what's it called? Well, looks like we'll be sticking around that 2.5 level right now. I do think that level will start popping off probably if we get another hot CPI report, we're going to start seeing this level run back to the levels that we haven't seen before, which is kind of bad. So we don't really want that, but it's totally possible. So the levels that we had before were, let's see here, we got all the way to, if I go out to the 5-year, when we were, I mean, I don't think we're going to get back to some of these crazy high levels, but we spiked during the banking crisis to about 2.8, and I could see a revisit to that. That really wouldn't surprise me. So, all right, let's take a peek over here. Yeah, looks like we're already kind of getting that drop back down. You tried to have a run there, couldn't hold on to it. So not a surprise to kind of see a little bit of a movement again to the downside. Okay, very well. There's ARM, same kind of move to the downside. Coins really holding on today. Google, Amazon, all of them sort of turning red here. Okay, let's see what Jimbo's got for us.
One of the greatest manufacturing companies in this country is a company called Snap-on Tools. And this makes, we all know, the finest tools for auto mechanics. And their actual tools number was minus 6.9%. And this is somewhat shocking given the consistency of this company. This is directly related to what I'm talking about, which is that there is a slowdown. This is about frugality, by the way. I mean, Snap-on Tools is franchises buy them and then they sell them to little mom and pop stores. Apparently the mom and pops are not buying as much as we thought. So just something to keep in mind. D.R. Horton, of course, is the other side of the trade. But Snap-on joins J.B. Hunt with a disappointing number and joins Prologis with a disappointing number and joins CarMax. So maybe things a little more balanced and maybe March was bad.
Brown shoots. Between that, Jim, and Apple Belton Road, I mean, you are on fire this week putting themes into short phrases.
Just a sec. I just got my top for Mad Money. Thank you so much, and I will be back.
All right. So where does that put us? So we have, if we go in, let's see here. There's a comment here that says, did Tesla offer Elon a new deal? They are voting on basically the same deal to see if they can bring the same deal back. That's what they're voting on. I think that the shareholder meeting's in June. So buckle up for that. Let's see here. What is, let's see, NVIDIA. Yeah, NVIDIA can't break that 850 level. Qs are struggling. Tesla down 3.5. Facebook's doing decently today. What did it say? $10. When measuring CPI for autos, monthly payments are higher because of interest rates, even though the vehicle itself isn't more valuable. So the CPI adjusts their measuring from that. I don't know if they use monthly payments because then you are double counting. But let's see here. BLS, CPI, let's see, autos. Let's see, measuring price changes. Okay, ready? So, the used cars and trucks index is comprised of used vehicles between 2 and 7 years old. Then they list all of them, okay. All used and goods and services are eligible for spending weight purposes due to logistical issues. Blah, blah, blah. The weight of used cars and trucks in the consumer price index is determined by spending on used cars and trucks, less trade-ins of new and used vehicles. Okay. General methodology. I'm pretty sure you calculate price level. Yeah, tracking retail prices. I don't think they track the loans at all. I don't think it matters. Trade-ins at their market value continue to be netted out of the price of purchased used cars and trucks. In addition, the market value of trade-ins on new vehicles is netted from the used rather than the... Okay, fine. Blah, 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 blah. Yeah, there's nothing here about them actually using loans. It's just the pricing information. CPI collects data on the first of each month from J.D. Power Valuation Services. The prices obtained from J.D. Power Valuation Services represent estimated vehicle values for each vehicle in the sample at the time of the data download. The valuation obtained on the first of each month is compared against valuations obtained on the first of the previous month before a price relative is calculated by directly comparing prices from the current period to the previous period. CPI adjusts each used vehicle for depreciation to account for its reduced value. Yeah, There's nothing in lending. Usually they don't do that. So it's a good question, but they usually, I have not seen them do that. So, yeah, usually it's just the nominal pricing, which is good. You know, that's what you would rather. So, okay, good. So what else do we have here? Okay, Q's, Tesla. I think this is all pretty boring right now. No big movements here. Anything? You've got Apple. Okay, very well. And BTC is actually moving up. That's a little bit of a bullish indicator. Let's listen in here for a moment.
Live, as always, from Post 9 of the New York Stock Exchange. Take a look at stocks. We've had 4 days of losses. We've started strong before, though, during the week. Can we break the losing streak? NASDAQ's already down for the day, 0.2%. S&P also barely positive, and the Dow up almost 200 points. Take a look at treasuries right now. More firmer economic data has led to more selling in treasuries, with yields elevated again. The 10-year note yield 4.629. The 2-year yield just under 5%, where it's been most of the week. We're 30 minutes here into the trading session. Here are 3 big movers we are watching. Shares of Tesla under pressure again for a 5th day in a row, trading close to new 52-week lows. Longtime Tesla bull Emmanuel Rosner of Deutsche Bank downgrades the EV maker, slashes his price target. He's going to join us this hour to talk about why he's making that move right now. Shares of D.R. Horton, the home builder, rallying after beating profit estimates and raising full-year revenue guidance. The continued lack of housing supply certainly helping to fuel sales. And then shares of Las Vegas Sands taking a drop. The casino operator posting a big profit beat, strengthen its Singapore business, helping to mask issues in Macau, which makes up the bulk of Las Vegas Sands' revenue stream. Earnings and revenue significantly disappointing in that market.
Got some data crossing the tape, and starting with existing home sales. Let's get to Diana Oleg. Hi, Diana.
Hey, Carl, good morning. Existing home sales fell 4.3% in March compared with February to a seasonally adjusted annualized rate of 4.19 million units, according to the realtors. That's slightly better than expectations. Sales still down 3.7% year over year. These sales are based on closings, so contracts signed in January and February. Mortgage rates stayed lower in January, then shot higher in February. Inventory did improve slightly, up 4.7% month to month to 1.11 million homes for sale at the end of March. That's a 3.2-month supply. Inventory is now up 14.4% than March of last year. But more supply is not really helping home prices. The median price of an existing home sold in March was $393,500, up 4.8% from the year before. It's also the highest price ever for the month of March. Now, the market is moving faster, with the typical home sitting on the market for just 33 days compared with 38 in February. Investors pulled back a bit, making up 15% of sales compared with 21% in February and 17% in March of last year. First-time buyers made a big comeback, though. 32% of sales, up from 26% in February and 28% the year before. Of course, Sarah, not helped much by mortgage rates, which moved higher this week again.
Yeah, and keep in mind, I highly anticipate that housing inventory will rise substantially here. I hate to say that, but I think it's highly likely that inventory is going to rise substantially, especially in places like Texas and Florida. And so I don't think there's like a huge particular rush for really diving out of or diving into some of the overbuilt markets for singles. I think there's a lot of stress, though, in multi that creates some opportunities to buy when it comes to real estate. Remember, we're doing that event in June, the Millionaire Symposium. We'll talk a lot about how to invest in real estate. Still thinking about doing those house hack events over the next couple weeks, perhaps. So stay tuned for that. If you want to meet the team on house hack, we'll come to a few different areas. Thinking Manhattan, LA, San Francisco, Toronto, London, things like that. Anyway, so stay tuned for that. What else? How are things moving right now? And let me see if there's any other news. Yeah, Nvidia went red and then came right back to green there for a moment. Q's down 20 bips. Tesla's down 3.8. Things relatively stable right now. Let's go just take a look at a couple more things here. 5%. John Williams, pretty middle of the road on the FOMC, and of course he has plenty of intellectual heft as an economist. As such, his comments that further rate hikes are possible should leave more of a mark than similar remarks earlier by Bowman. Basically, they're like, we like Williams more. Williams always qualifies his sentiment by acknowledging that hikes are not the base case, but acknowledging that they're possible if the data warrants. Yeah, JPOW hasn't been the one to say that just yet. But yeah, this is gonna be very interesting. Thoughts on housing inventory increasing due to property taxes and home insurance pricing out current? Yeah, sure. Absolutely possible. Yeah, and with the Manhattan one might end up being Teterboro, because what we might do is just meet people at the airport. You know, then we don't have to drive into the city, and you guys can see my pee-pee. Yeah, right. Okay. I'm going to get kicked off YouTube now. So I got to get to the course member live stream, and I got to make myself some more coffee. So I'm going to push the button now. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right. Remember, we got a coupon expiration tomorrow. Email us at staff@meetkevin.com if you need a bundled coupon. And yeah, if we do the HouseHack events, those will probably be free. It's like a little road show or something like that, so we'll see. Anyway, thanks for being here, folks. We'll see you soon. Bye.